and this is the third weekly commentary for the mentorship, yeah? So, the people that are new to the group, every single weekend I do a commentary on how the market traded. I look at the dollar, Euro USD, GBP USD, and as some of you trade crypto, I also do an outlook on Bitcoin. These are the ones that have the most educational value, in my opinion. Reason being, you see all the concepts merged together, blended together throughout the whole week. Yeah. So just to touch on the dollar. Yeah. Uh, so this was, let's remove this. This was from your lesson 5, the data ranges. So with the dollar, there was this imbalance that we wanted to clear, and it did clear that pretty nicely. So for the people that don't know what imbalance is, it's the bodies of the candles that don't are not overlapped with the wick. We're gonna go, I'll give you the proper definition and things like that when we do touch on the imbalances, and I think it'll be in like 2 weeks we'll touch on it. This wick to this candle's bottom wick, only this candle's body exists. There's only selling in there. So what do we need to rebalance the selling with? Buying. Now, this candle, if I just remove this, so remember this wick to this wick, and I'm just going to remove it. This candle's wick comes in and pretty much fills the entire gap. The last buy side objective for the DXY, because right now I feel like pretty much my buy side targets are done for the DXY. This is a rejection block, which it could reject off within the wicks. So the top of the candle, the start of the wick, could be a rejection zone for the DXY. We just want to see where price wants to deliver to. Is the algorithm going to seek the liquidity above this high? If it does seek the liquidity above that high, it's going to seek the liquidity above this high as well. Yeah. Let's go into an hourly chart. So what I have here is each day's trading, right? So let's analyze it together. There was a huge gap opening. Yeah, that was a huge gap opening, and we're trading inside the gap. Yeah, we're trading above the gap. Monday comes and fills in the gap. Tuesday comes lower. Remember, it makes a low of the day. At what time did I tell you guys to watch? 2 to 5 a.m. New York time. This is at 3 a.m. This is the low of the day, and it runs higher. What it does is it seeked the liquidity below this low, and it made a run higher, attacking this buy stop. Whenever, and you might want to make a note of this, whenever there is an attack on buy stops or sell stops, think about it. What do you need to do if you want to push it long again? You need to reaccumulate more orders. So you see here, we push above this high. We remove these buy stops. Then we come down. And what do? We rebalance this imbalance. Yeah. So from this wick now, from this candle causes an imbalance because it moves up in one way, I mean. So from this candle's wick, the previous candle wick, to this candle's wick, there's an imbalance. You see that these candles retrace, and this is something I love to see. This is one thing that literally I trade off of this so often, guys, and this can be your model. Whenever there is a high broken by a candle with a big body, you want to see the retracement into closing the imbalance, rejection off of it, and push higher. Because what does the market do here? It does two things simultaneously. It is rebalancing this imbalance area whilst accumulating more orders to go long. Because people, the natural, not the natural, the average trader will see this as support. They don't just see this as resistance, I mean. They'll give a bit of leeway, say, yeah, it rejected off here. Look at the bodies, it's close here. Yeah, we're coming back down, whatever. So people will short this. This move down away from the high. People will short this. But what do we know? What do we see it as? We see it as the market rebalancing imbalances. Accumulates more orders, drives up higher, takes out this high. What's left here? Imbalance, order block. Yeah. We see price comes and fills that imbalance, pushes higher, and breaks down. It breaks down, and we see this big candle. This candle here, if you go on the 15-minute, this candle here, it did not break the low of this. Yeah, it didn't break the low here, and it's consolidating. Gaps higher. So let's go back to the 1 hour. Moves up, gaps, fills in a lot of the gap, and we make the high of the week. So the anatomy of this weekly candle of the DXY was what? Low of the week on Monday, and price pushed up onto Friday, making the high of the week. Now, why was it likely that Friday was the high of the week, and how did I anticipate that this week? Because of the NFP. You have to line things up. Whenever you have a trade idea, you need to have the references to back it up. Just like anything else, you need logic behind each trade. We had a news event, a significant news event on Friday. So what is that likely gonna do? What likely impact is that gonna have on the market? It will be a significant move. Whenever you see NFP, NFP usually does make the high or the opposite end of the range. Yeah. So when you make, let's say you had to make the high of the week, you had to make this weekly candle, and you had to make the candle finish bullish. Well, for you to make it finish bullish, what you have to do, you have to quickly price in the low of the week, because then you need the rest of the upper days to push price up higher, right? To finish your buy side targets if you are the market maker. So what do you go and do? If you're anticipating the week to become bullish, the first day or two, you want to see a rundown. Now, where do you want to see it run down to is we'll cover that in the mentorship. But you want to see a rundown because every single candle needs a low. Every candle has a low, a high, a open, and a close. So what do you need to do? You need to make the low of that weekly candle. Once that low's made, which will be fast, like you'll see. Let's go to a 15 or 5-minute candle. So like all these candles, right? They come down and they close bullish. Comes down a bit, close bullish. Comes down, closes bullish. This one doesn't come down at all. This one comes down a little. Every single candle, or most of the candles, 90% of the candles, they have wicks. It's the same thing with the weekly. You need to make a low for there then to make a high when that week is predetermined to come high. And why was our bias bullish? Because we want to see price. Price was doing what here? Attacking highs, rejecting and finding what support at this order block, pushing up higher, not violating lows. Price then, what do we expect to do? We wanted to see it outline this. I think I outlined this on the Thursday before NFP did attack this. Now, how did that affect the market for the euro? So remember what I said, right? When there's a retracement into an order block, yeah, fills in this imbalance is filled in, retracement into an order block, and what do? We go and there's one candle that does what? Takes out sell stops, and it's the main move of that day. Then what does Monday go and do? Monday goes and fills in majority of this candle. That is what I love to see. When there's a big candle and you see this little 1, 2, 3, 4, 5 push up into the candle to rebalance it. You'll just see this because what do people see this as? On the low time frames, right? People will get lost on the low time frame. People start seeing this and they'll start thinking, yeah, we're bullish, we're bullish. Oh my god, look at this move up. Oh, this was just a manipulation. Now people, it's gonna go higher. No, it's not. Look at so everything has to start from the daily. The daily shows what that it's likely to go down, right? Because we're below this low now. What are we attacking? We're attacking the week. We're on the weekly, right? There was this imbalance, and I'm pretty sure I outlined this ages ago. It's on the chart section 100%, and now we feel that we've completely filled that. So that was what the daily candles were reaching into, yeah. So now we know on the weekly what we're reaching for. We're reaching for this sell side target, this gap. That's where you find the confidence in knowing that this is only a retracement in filling this in before we can go down higher. And again, what does that do? This move up is doing what? Accumulating long orders, taking traders, retail traders on the wrong side of the market, and then you're shorting their position. Fills in this gap, the majority of the gap, and we go down lower. Tuesday goes right into this rejection block, and we break down lower. And from then, there's little retracements up, clear this internal liquidity here with this wick, and we come back down. This candle comes down. Like, look at this candle, yeah? We're coming down. What's this doing? Retracement up. It's filling this candle's imbalance. That's what it's doing. This candle filling the imbalance and moving away from it. So what do we expect with here? Well, I'm expecting a retracement into the imbalance and then maybe shooting off again. But however, the DXY is at a place where I can expect some sort of stall happening within the DXY because that target is done. So if the DXY stalls, it's likely the euro will also stall. But let's go on the 4 hour for the euro. And what do we have? This big candle and we have imbalance. So what does the market need to do? It needs to rebalance those areas. So we can look to rebalance those areas before another move. We need to always accumulate orders before a move. The market can't just go high to low, high to low. There always has to be some sort of consolidation to reaccumulate orders in order to fund the move higher or lower. You can see on the 15 minute, the 15 minute and the hour is not too different, I mean, but so if we go on the 1 hour again, this whole down section here is a breaker collectively. We'll get into that as well. But that's how the euro was trading. If you want to go on the 5 minutes, this is extremely clean. Every single retracement here was literally to close an imbalance. This one, 50% of the imbalance comes back down. Fills in all this imbalance, comes back down. Fills this imbalance to a degree, comes back down. This is a nice buy side target if you do find a long, but that is a stretch because it's very high up. But it's definitely something to consider if we do start to attack highs. And now we're just ranging around here. This, when you see this, you don't try trade this. This isn't for trading. This is for anticipation. This is where you let the market accumulate orders and you see what way the market wants to move. There is a concept called AMD, accumulation, manipulation, and then distribution. This is an accumulative phase. There will be some sort of manipulation So it might move down into this imbalance, or it might go clear some lows. Manipulative move before the real move. Whenever there's a consolidation, you want to wait for the manipulative move before the distributive move. You want to get in with the distribution, not the manipulation, because the manipulation can be very fast and is there to throw traders off course. The distribution is the real move. If you look at the daily for the euro dollar, we can see it happen here. There's accumulation, there's manipulation on both sides, and then there's the distribution. This on the daily. Forget the time frame. This pattern happens on all time frames. Are you seeing it? This high to this low, yeah? Remember, look, consolidation, high, low, and then it goes back and consolidates within the range, yeah? Now let's go on the 5 minute. Comes up higher, comes back lower, consolidates in the range. They are fractal. This is a very textbook consolidation. Accumulation, higher, takes out the sellers, comes back. You want to get in with the real move when it does happen. It's the exact same thing. And now you guys might have seen this and be like, what? It's the exact same. Yes, because the market has a fractal aspect. The only difference between the daily and the 5 minute, the daily candles take a day to close, 5 minute candles take 5 minutes to close. That's the only difference there is in the market. Looking at the euro dollar, you see how this is all imbalance, rebalancing each other as it comes down, yeah? So now from this wick, this whole candle's body up until this wick is an area of imbalance. Which is this area here. If you go to 15, this is the close of the imbalance. Now we don't need to see the entire close of the imbalance. We can see the 50% of it happening, but that is the things to expect. Yeah, you just want to frame a high probability idea into the market. That's all it is. Having a high time frame bias and framing it on the low time frame, and a lot of it is going to come from patience. This is not something you want to trade. Don't try to trade something like that. You always want to trade like me, the retracement on the gaps. I like that stuff. I like to trade that. It works well for me. That's how I done it on GBP USD. If you look at GBP USD, it's got the 1 hour. GBP USD, it runs this previous week's highs, comes lower. Wednesday drives up higher to do what? It comes up to rebalance this area, and you see how it doesn't take out this high. You see how it doesn't take out this high, and look at these candles. When you see candles like this on the low time frames, this is 100 million% a range. This was the range, yeah? And this is where I found shorts as well. There's the high. We run that high. We run the low time frame high, but we're under the higher time frame significant high. Rewind that a few times. We run the short term high on the 15 minute, but this high is still underneath and rejecting off of the significant high here on the higher time frame 4 hour. Then we see the run lower below this low. That is the shift in market structure. You see as it's coming down, these candles rebalancing each area. I want you guys to always do this every single day. Have it how I have it on the 15-minute and see what price was doing. See how price retraces into these gaps, into these imbalances, and it rejects off of it. Just once you do this for a month, you would see it and you can frame setups around it. This was a news event we spoke about at 10 o'clock. There was a news event, 9:45, drives down lower. The news event at 10 used to do what? Rebalance this area, comes down lower, and then what do? We retrace. We're accumulating more. What are we doing in this range? We're accumulating more orders. Yeah? Then we break down lower and we keep breaking down. This is an area of imbalance here. There's imbalance from here, but you want to consider this candle's body. There's this imbalance from this candle's wick to this candle's wick that we're starting to fill in, and those are the type of things to consider. However, you want to watch the DXY and see what the DXY wants to do. It has some sort of areas to rebalance. These gaps are something to consider as well. I say let Monday play out and see what has happened on Monday, because one day of price action can tell you a lot of story. Do we go drive lower and start respecting the imbalances on the Monday and push up higher? If that does happen, it shows indication of price wanted to go higher. Tuesday we'll look for higher prices to get long. Stuff like that is literally patience pays a virtue. So that's the euro dollar and the pound dollar with the DXY. Now Bitcoin. Let's go on to Bitcoin. Bitcoin. This is a breaker block that I have. This up candle before the down move, this is an order block here. And from this candle's wick to this candle's wick, we had imbalance with inside this candle's body. And what do? We fill it so nicely. And now what happens? Price starts to reject off of this. Now, I can go into a lot more detail with this. I can go into a lot more detail with everything. As we progress within the mentorship, the weekly commentaries are only going to become better, because when you unlock new concepts, I can explain them within the midweek commentary. There's no point in me explaining them right now because you don't know what they are. But in 2 or 3 months' time, these midweek commentaries are going to be 10 times better, because we can consider a lot more things within the mentorship that we've covered. Anyway, we come into this area and we reject multiple times, because what are we doing? Remember what I said: retracement, filling in gap, at the same time accumulating what? We're accumulating more orders. That's what the consolidation is doing. What are we doing? We ran a short-term high here. This is a short-term high. Above the short-term high, we had this gap. So the market does a 2-in-1. Clears anyone that was short here. Because what do people do? They trail their stop losses. So anyone that had their stop loss trailed here is now removed from the market. Anyone that was short from here is removed from the market. Clears this imbalance and we move down lower. Comes up again, rejects off of it again, and we move down lower. Now, yes, there's an order block here. And what did we say? I said in the Bitcoin commentary that I did want to see this candle's imbalance. It's on the record. If you go and watch it, I said I want to see this candle's imbalance get filled, but you want to watch out for this order block. This is something that will come and stall price. This order block here. Now, I don't mean that we'll reject off this and bounce off. I don't say that. I say this is a place where price can stall and you can watch it on the video. We filled in this imbalance on the hour completely, basically. Yeah, the imbalance from here is where it starts, basically, because these are two down candles in one go. What do we have here? Here we have an area of imbalance. So the 4 hours here, the four. This is our 4 hour imbalance. So what does price do? I want to see it accumulate orders, keep accumulating and edge higher into this, and then see it break down. That's something I'd want to see in Bitcoin. I want to see it keep edging up higher, eventually into this somewhere into this box and break lower. That's what I'd like to see. That looks like a mess. Now the 4 hour, I said 36.5, right? 36.5 is a nice half mid figure, and it lines up with the middle of this imbalance. We have a short-term low here. I want to see price fill this in and run this low and fill this imbalance for now. That's what I want to see for Bitcoin as of now. That's what I'm anticipating, and that's what I think the accumulation of orders here is gonna fund. The run under this low into this imbalance. That's what I would want to see for Bitcoin. And again, you don't get involved with a cumulative phase. You get involved with the meat of the move. You get involved when it distributes. And you might think, but what about if it just goes one way and leaves me alone? It won't do that. It won't do that. Like Kia, you thought you'll get left behind, retraces up, comes back down. Again, you thought you got left behind, retraces up into the imbalance, and it comes back down. What makes you think you're going to get left out on this move? Remember, the market has to rebalance these certain areas. Sure, it doesn't have to do it now. That's completely fine. But the highest probability short, if you're trying to short, will be within this area. Within the 1 hour imbalance, 4 hour imbalance on the 15, there's this order block, but there's also a liquidity pool above here, and above it, we have this imbalance. I'd like to see it get above here for a short on the 30-minute. From here, this is a mitigation area. I'll just outline that. Yeah, I'll just keep that here. So the low of that comes in at, it's the low of this candle. So 40409, that's the start of the mitigation block. And that's what I'd like to see. That's how you guys want to view the market. It's all coming from the higher time frame. You want to know the direction you're going in the higher time frame overall. Because once you know the direction you're going in overall in the high time frames, you won't get lost in the retracement. You will keep your eyes. It's kind of like keeping your eyes on the price. You're looking for lower prices. So what you waiting for? You're waiting for the retracements up to get short again, and then you get short again, and then get short again until your sell side is done. That's what we were doing with the DXY. We were bullish to DXY. So what was I doing? Every single time the GBP USD gave me a retracement higher, I was shorting it. That's what I was doing. Market comes down, comes up higher. Shorted it. I think I shorted it above. I shorted this area so many times. It's ridiculous. Uh, in the 5 minute, I'm trying to find where I went short. I think I was short here. Yeah. It was here because this was a sell model, right? Yeah, it was a sell model here. Broke this low. I got short in here. around this one right here. On this green candle, I got short. When you break it down like this and see every single day, and you see what the days are reaching for, it's very clear what to expect from. But I'll say it again because it's so important. Right now, what I want you guys to do for the Euro USD is see what the next candle. I want you to, so the candle after this, not this candle, the next candle, I want you to predict, yeah, how that candle will trade. So is that candle going to trade higher or lower and close bullish or bearish? So is it going to be a bullish candle or bearish candle? And I want your conviction why you believe that. So for example, I believe that Monday would be a bullish day to fill in this imbalance. As the previous week we had a heavy move down and we left imbalance, and I want to see the market rebalance the imbalance that I left from last week and accumulate more long orders to short the market again. That's my conviction for a bullish close on Monday. Something like that. I want you guys to do that every single day. Get it wrong. Get it wrong. As long as you reflect on it and you know why it's wrong, that is fine. Because once you know and you get good at anticipating where the daily direction is going, what do you need to do? It's just a low time frame entry that's in line with your daily direction. That's it. We attack this sell stop. When we attack that sell stop, what does it mean? The algorithm is looking for high prices. On the weekly, what do? We completely traded through that imbalance. There was no respect shown to that imbalance, showing what? That the algorithm is not considering rejecting off of bullish imbalances. It's not considering it. It's disrespected it. And it's showing what? That's got no conviction to reject off bullish areas. So it's probably determining lower prices. What's the next stop for price? These lows. Ultimately this low. That's on the weekly. Knowing that on the weekly will help you again frame where the daily candles should go, because if you know where the weekly candles going, you should know where the daily candles are going. If you know where the daily candles are going, you know where those 1 hour candles, 15-minute candles, 5 minutes, you know the overall direction for them. Do you see the importance of the weekly and the daily now? Know where the weekly's going, know where the daily's going. You just need to find a setup then. That's it. So I hope this video helped. This is the third midweek commentary. Any questions, do ask me. Watch these a lot. When you watch it, try practice what you see. So again, with the Euro USD, what do we see? Price come down heavy and leave what? Imbalance. Imbalance here and imbalance here. What did these candles do? We're accumulating orders. As we're accumulating orders, we're doing what? We're filling areas of imbalance, accumulating long orders, making people think that this is going higher, and then we short the market. It's not hard. It takes practice, yeah? You need to do things. Don't get frustrated that you're not getting it straight away. I wish I got it straight away. 3 years deep it took me to get to this level. My bad. 3 years deep it took me to get to this level. It comes with practice, knowing how the market will move, and this is patience. This is literally patience. Nothing else here. This is disgusting to trade. From here to the fill of this imbalance, it is disgusting to trade it. You don't want to get involved with the accumulative phase. When you see the accumulative phase, what you want to get involved in and watch, yeah? So when there's the accumulation phase, you want to kind of know what side the manipulation will happen, right? And this is a quote unquote gem. So when you see this accumulative phase, within the accumulative phase, you want to see it fill an imbalance or tag an order block or tag something, which we'll go over in depth, trust me. As you see it's in the accumulative phase, as you see it tag into this imbalance and reject, it shows you what it accumulated orders for, or what it's accumulating orders. It's accumulating long orders to short overall. Because you need people to go long here to short, right? You need buyers in order to sell to the buyers. As well as doing that, the market completes the objective of rebalancing imbalances. That's how you know where the accumulative phase could be going. That's a telltale sign of doing it. So if we see this again, accumulative phase into the imbalance, taking buyers to the wrong side and then shorting them, those things are very common signs of the market. But anyway, we'll go over. We have another lesson. This lesson is gonna. The next lesson should tie up the whole of chapter one. It might be a long lesson. It'll be a good lesson. I don't think there will be any question about bias after that lesson. There shouldn't be. I want you guys to study really hard. Don't fly through the lessons. Just because I upload a lesson doesn't mean you just go watch it for the sake of watching it. You watch it until you understand it, you apply it, you just learn everything you can in that video. Take notes, apply it. If you're not applying it, there's no point. I'll be real, you're wasting your time. Because I don't know if you've been in other premiums. I give you lot activities for a reason. Because I know the benefits behind these activities. And when you do these for long enough, you will build a muscle memory, and that muscle memory will allow you to start to frame trade setups. I'm not here to drag you lot out. I'm not here to tell you lot this. I honestly want the best for you guys. Yeah. Do the activities I told you. For I know you don't want to jump the gun, go live trade, make profit. I completely understand that. But remember that message I told you guys at the start. Submit to time, and it will come. It's only listen. It hasn't even been a month in the mentorship, and some of you are making crazy progress. So imagine in 4 months, 5 months. Just imagine 4, 5 months from now. This is not even 1 month. You've submitted to the fact of 1 month already. And a lot of you have learned new stuff, seen different things that you haven't seen before. So imagine 4, 5 months. You will be able to do this. You might be doing the midweek commentaries. Take time and do the activities. Trust me, just do the activities. I know why. Let me show you something. Oh, I can't show you. I have the syllabus. The syllabus, it makes so much sense. It's tailor made because I believe that is the way to teach trading successfully. Just put some trust in me. Don't jump the gun and start trading live funds. Trust me, it's not worth burning money. You're learning, your time will come. A lot of you are young. You have so much time. Trust me. Even no one here is 30 years old. Put it like that. No one here is 30 years old. Everyone has time. There's no rush. Rushing it is only going to mess you up in the long run. Trust me, I was there. If I had done this slower and I had the right guidance from a lot earlier on, maybe my journey would have got cut in half. At the end of the day, it's going to come to you and your hard work. I can give you everything. I'm giving you these videos. I'm pumping out content. I'm doing my things. I'm doing my promise. I'm holding my part of the deal. You need to hold your part of the deal to yourself and study it, make notes, look at everything, digest it, take time with it, everything. So that's enough rambling from me. Any questions, hit me up on the Discord question section, or if you don't want to ask a question in public, you can always ask me privately on Snapchat. Have a good day, guys.